And I'll just keep trying, I guess.
February 3rd meeting of the Cocoa Beach Police and Fire Pension Boards, and we'll start with a roll call. Dan?
Here.
William?
Present.
Joe? Greg?
Present.
Tommy here.
On the fire side, we have AJ,
Here.
Finley,
Here.
Latham,
Here.
Kane,
Here.
all present.
Next item is the public comment. Do we have any public comment? Okay, none. We need a motion to approve the minutes of the last meeting.
I'll give the motion. Second.
I'm sorry, who did what? Okay.
Stanley.
And who seconded it?
Dan.
Okay.
All in favor? Aye. Opposed? Fire?
Motion to accept the minutes? Dean? Second.
Second.
Steven, second. All in favor?
Aye.
Next, we have the expenses to approve for the last period. Does anybody have any questions about the expenses?
No.
Do we have a motion to approve those?
So moved.
Dan,
Second.
second. All in favor?
Aye.
Opposed? Motion carries.
On the fire side, motion to accept expenses?
Motion to accept.
Second.
All in favor?
Aye.
Carrie, we're ready for you.
Thank you very much. Good afternoon. Good to see you all. Hope everybody's holidays were wonderful. Can't believe we're already in February. Looking back to where we finished December, I'll open in your performance books to what is page number 3, where our typical market charts start. And as this is the first quarter of our new fiscal year, we were off to a pretty good start if we look on our typical charts on the top right there. You can see the S&P was up just shy of about 3% for the quarter. All sectors really of U.S. equity were positive. You can see mid caps only marginally so, but all other segments, including small cap, up 2% or north of that. And I think, a few different things going on. Obviously, there's a lot going on geopolitically, but I think probably a lot would agree the U.S. economy's held up probably better than a lot of people expected. And I think, GDP continues to surprise to the upside. Some of that is just the sheer amount of capital expenditures going on around AI. Some of that is that consumers continue to spend, especially those wealthier top 10% of households. And that has lifted, GDP, I think, probably higher than most expected for 2025. Inflation continues to be at kind of a reasonable level, kind of mid 2%, 2.6, 2.7, depending upon whether you look at CPI or core. It's higher than where the Fed wants to be at 2, but by historical standards, 3% is about right for inflation. So, definitely a more reasonable level of inflation. And I think, you kind of see that coming through in markets and in those positive numbers. What was interesting was, as we rounded out the end of the quarter, you did see a rotation away from some of those very growthy names we've talked a lot about, over concerns that AI spending might be a little bit early. It's kind of early to know who the winners and losers may be there. So some of those Magnificent Seven names actually rotated out, and value kind of led the way to end the quarter. But for the full year, it was still very much a growth story within U.S. equity and particularly within large cap. Overseas markets, you can see in the middle there, kind of in the yellowish orange. Pick an index, the all country, which is on top, over 5% for the quarter. EFA developed markets and emerging markets all, up right around that 5% level. And I think a few different things going on there. The U.S. dollar overall weakened in 2025. That's a nice tailwind for international equity. That segment had also been pretty underloved, and so was kind of ripe for a little bit of a comeback there. And you also saw within emerging markets, particularly, some reshoring themes. So countries like Mexico, Taiwan, viewed as beneficiaries of countries redoing their supply chains, and kind of put that all together. And international was a great place to be for the quarter. And then even within fixed income in the bottom segment there, That darkest bar is the full 1 to 30-year bond aggregate, and that was up a little over 1%. And what we saw from an interest rate standpoint for the quarter was long rates did not change very much. I think the 10-year maybe changed 2 basis points. It's very static. The short end of the curve did respond to the cuts we got from the Fed. We got 3 25 basis point cuts from the Federal Reserve in the overnight rate. But again, overall in the longer end of the curve, not a lot of changes there. So essentially the 1% we got was coupon coming off the ag. And then if we look down to the bottom chart, that's sort of 2025, the calendar shot of 2025. And the numbers are just, stellar. So almost 18% for the S&P. Every overseas, international equity index did over 30%. And even bonds gave us 7% for the calendar 2025. So I think with everything going on in the background, it's markets have been incredibly resilient. You kind of never know from looking at these numbers what we've been through in 2025. So I think, good start for our new fiscal year for sure from an economic standpoint. And then I'll say we continue to see little green shoots from real estate. That index, again, gave us about 1%. I think that's 4 or 5 quarters in a row. Most of that continues just to be income. I think ASB said there was maybe 11 basis points of appreciation, but at least it seems like maybe on the whole valuations are settling down a little bit, and it continues to throw that income, which is a good thing. On the real estate side, as you all know, we did commit to Mavic, which is that kind of more value-added real estate manager.
Pedro, are you there?
Yes, ma'am. I'm here. Thank you so much.
Okay, all right. We're in, Carrie's giving her presentation at the moment.
Yes. Thank you.
We have committed to Mavic, and as you know, that paperwork is in. We have not had a call yet, but I do anticipate over the next couple of months or so, we'll start to kind of be putting that money to work as well within real estate. But across the board, and for starting our new fiscal year, good positive quarter. The numbers are a little smaller than we're used to. We've had some really big swing quarters here recently, but nonetheless a good, marginally positive quarter to start our new fiscal year, which I think is a good thing. Again, especially with everything going on in the background geopolitically, it's kind of amazing how resilient markets have been. Can't kind of say that enough. Moving on from the economics, unless there's any questions there, I'm going to move in your respective books to what is page number 13 for each of your fund. It's that 10-year line graph of growth for each of the funds. And so starting with fire, on page 13, you can see you ended the quarter with about $22.16 million. And in the very bottom line there, we kind of give you an accounting of the flows for the last 10 years. Only 10 years ago, we were at about 11.6 million. Again, now we're about 22.2, almost double. We've paid out about 2.5 million in expenses and more importantly, benefits. Our dollar gain over 10 years is over $13 million. And that equates to a return of just over 8.5% over that 10-year period. Flipping over to the police side, just behind that, you all were at about I'm going to round up to $21.4 million on an end of quarter basis. Very similarly, started at about 11.7 million. You've paid out about 3.2 million in benefits and expenses, just shy of 13 million for your gain over the 10 years in dollars, getting you again to that roughly 21.4 million and 8.5 return on a 10-year basis. Very good numbers over the 10-year, very happy to see that for your fund and ultimately for your beneficiaries who certainly deserve, those benefits in a healthy fund as well. Moving from there in your books, I'll just go to the next page, which is our kind of pie charts of where the assets are for each fund, kind of just a high-level view there. And for fire, I'll start with you all again, as we mentioned, just over 22 million, about 22.2 million in your fund. As far as where the assets were at the end of the quarter, about 51% of your assets on the fire side were in domestic equity. Just shy of 18% of your fund was in international equity. You were at about 16.5% of the fund in domestic fixed income. You had just over 4% in global fixed income. I'm going to round up to just about 9% in real estate and then less than 2% in cash. On the police side, And similar as expected, about 52% in domestic equity for police, about 16.5 in international equity, same amount, 16.5 in domestic fixed income, just over 4% in global fixed, just over 9% in real estate, and again, just about 2% in cash for your fund as well. Just a couple of pages from there, what is page number, I'm just going to skip ahead a little bit, my book is moving slow. We're going to go from there to what is page numbered at the bottom of your book, it's going to be 19, and that's our relative asset allocation view for each of your funds. And in summary, both of the plans are compliant with your investment policy. You'll see in both cases, we're a little overweight in domestic and international equity. Not a surprise because so much of the returns has come from those two segments. Very much in compliance, even from a domestic fixed income, and global is a little underweight, but really not much. And as you all know, as we've kind of let ASB draw down, that's the most underweight sector is real estate, even though we're still compliant with our policy. And as I mentioned, as we begin to get those capital calls for Mavic as well, that will remedy itself. I do expect that to start anytime. So very comfortable with where both of the funds are from an asset allocation standpoint on that page. Moving from there, just kind of putting some numbers to your quarter on page number 22 in each of your books. For the quarter for fire, we were up just about 1.8%. We did trail the benchmark slightly. That was up a little over 2%. And that was on some weakness both in large growth and in large value. And I'll talk a little bit more as we kind of get into the managers themselves. On the police side, obviously very similarly, also up about 1.8%, over the benchmark up about 2.3%. Very similar reasons kind of behind the performance there. Looking at equity, both US and overseas, together we were up about 2%. The index was up slightly more than that, about 3%. Within your domestic equity segments, you can see we were up slightly north than 0.5%. The index itself was up about 2.4%. As I mentioned, if you look through kind of to the themes, growth did come out of favor for the quarter, most notably in mid-cap growth. You can see Touchstone was actually slightly negative. Their selection actually held up a little bit better though, so they were down 3%, the index was down closer to 4%. On the large and mega cap growth side, Winslow, kind of in that rotation that we talked about. In particular, Spotify is a name that they like a lot. There's a CEO transition coming online, that was a little bit of a drag. And DoorDash as well, making some significant investments in the business, thinking they'll repay down the road. Those names were a little bit of a detractor there, again, as we saw also some of the Mag 7s pull back. On the value side, we had some good performance from Vanguard Equity Income, pretty much in line with the index there, up just north of 3.5%. Brandywine, your other value manager, though, did trail. A couple of things going on there. They like lower return on equity, kind of cheaper companies. They also have a tilt towards quality, and some of the kind of lower quality companies have done well in that segment, and we've kind of seen that for a little while now. So for Brandywine, who's really screening for those cheaper stocks that are also quality stocks, that's been a little bit of a headwind for them, and kind of something that we're watching very closely there. And then, of course, you all have the extended market as well, which was just marginally positive, that index for the quarter too. Moving to international, value was very much the story in international equities as well. On the next page, you'll see together that segment was up north of 6.5% ahead of the index, which was up more like 5%. And the performance here really came from DFA on the value side, up almost 8.5%. European financials in particular for the calendar year 2025 were up over 100%. So value-oriented kind of industrials, particularly financials, really doing very nicely. Where on the growth side, you can see some of those growthier names kind of out of favor from a Euro-Pacific standpoint. Some of the kind of AI, aircraft themed names that are a little bit higher valuation did pull back a little bit. But again, kind of putting those together, a very nice combination, and did lift you over the index there. Within fixed income overall, we were up about 1.5%. Domestically, we were up about 1.3%. Dodge & Cox, uses credit securities very heavily in their portfolio, and that has continued to work very well for them, putting them slightly ahead of the index there. On the global side, PIMCO, giving you some good performance of about 2% for the quarter. And then, as I mentioned, for real estate, we're getting about 1% gross here. That was about 80 basis points from ASB, all pretty much coming from income as the values are kind of largely flat there. So I think kind of in summary, large cap growth, that space kind of continues to be a challenge. It'll be interesting to see if it still kind of shakes out a little bit. I think that will be good for markets. If you do see a little bit more broadening there and kind of a return to quality. But that growth segment has been, a significant challenge and something that we're watching very closely. And I would say the same for Brandywine, kind of keeping an eye on that strategy as well and the environment too, noting that both of those strategies have struggled. We'll continue to kind of keep an eye on those over time. But I think almost 2%, pretty good place to start the fiscal year. It's not a big number, but if we do that 4 times, we'll hit your assumption, which is a good thing. So, not disappointed with where we're starting our fiscal year, up about 1.8% net of fees. And happy to answer any questions that you all might have.
Do we have any investments in critical minerals or precious metals?
So not directly. You may have managers that buy some of those companies, and I can tell you, I do see some of those plays. I just want to pull up. Some of DFA, in addition to the financials that I talked to you about, they do hold kind of some mining names. I see Barrick Mining Corp. Some managers will hold those as they like the names and the opportunities. But they're the ones that would pick those on your behalf, if that makes sense. We obviously don't have any dedicated investments to that, but your managers may choose to do that. Sometimes we'll see, some of that. And right now for DFA International, they do have some exposure to what looks like, mining and elements. I only see kind of one name in their largest top 10, but there's certainly some.
Thank you.
And there may be others too. I just happened to see that one
Yeah.
offhand.
Very last couple meetings, we did the hypothetical.
Yes,
crypto
yes,
comparison.
yes.
How's that working?
Yeah, so the last time we met, we were actually slightly worse off. And so I thought, for May, I'll refresh that for you all again. When we first looked at it mid last year, it was slightly better with 2% Bitcoin. Last time at the end of December, it was, slightly down. So my thought was, every other meeting we'll continue to look at that. As you know, very, very volatile. So.
Do you have any
yeah.
up-to-date numbers?
I do. I actually had to email them to Debbie because I've been at a conference, but both funds are up since the end of January, and I'll just kind of give you those numbers too until you're able to see your emails. But through the end of January, I'll kind of give you updated numbers here. This is FIRE. So FIRE, as of the very last business day of January, you were up $22,685,000. And police, you all were at $21,860,000. So you remained in a great place through the end of January too.
Thank you.
Absolutely.
And I can't get into my emails right now.
Okay, we'll figure out a way to get them to you. Right now they're electronic, but we'll figure out a way to get those out. I hadn't been to the office because I'd been in a conference, so.
Last meeting you mentioned you were looking into ASB's performance.
Yes,
Do you have
yes.
anything to say on that?
We continue to watch it. We are in full liquidation, meaning we've asked them for our money back there. Their latest update, I think, is cautiously optimistic. They basically said they're seeing some good kind of absorption, particularly in industrial. They did $100 million of property sales in the third quarter, so they continue to try to reposition themselves and also raise cash. One thing that I liked a lot is their office allocation is now down to 10% of the portfolio. The index is 18. So as you all know, that was a big part of their struggle. I think being about half the index weight, is all else equal, is going to help them. So I think there's green shoots, not only for real estate, but for ASB too. It's just going to be a very slow process because of how, there's a lot of inertia in that particular space. But I do feel better, for sure, with what I'm seeing and hearing from ASB. Yeah.
Thank you.
Any more questions? Do we have Pedro now?
Pedro, you still there?
Yes, ma'am. Yes, I'm still here.
You're on.
Okay. Actually, apologize. Currently on, I just got onto the bottom heading back from the FDCPA. Since I lose it, I apologize. I thought you guys first couple things I wanted to touch on first, with respect to legislative updates. You're likely aware of legislative
Pedro, can you
session.
slow down just a little bit? We're trying to volume you down a little bit, 'cause it's too loud.
Well, IT's doing it.
IT's doing it?
Thank
Okay.
God, because this is really confusing.
Okay.
All right, give that a try.
You want me to wait a little bit, or?
A little more.
A little more.
A little more? Speak up to me.
How's it?
Is this better?
Yes.
Yes.
Okay. So I was just going to give you guys an update legislatively. You may be aware, obviously, session has already begun. It did start much sooner this year than it has historically. Clearly, there's the end of the day, I'm sure you guys have messaged. There's a few hot button issues that are being discussed. Potential redistricting, obviously the property taxes.
Pedro, are you in a car?
I'm on the Bright Line train.
Because your speaker, you're breaking up.
Yeah, I'm sorry. I'm heading back from the FDBTA. I was speaking this morning, actually.
Okay.
I'm not saying we're trying to get the best here I can.
All right. Basically, is there anything important that we need to know? Because otherwise we can wait till May.
Okay. So no, nothing you need to know, nothing you need to act upon. The only thing I did want to maybe address is, I hope you guys will still hear me. In light of many of my clients have kind of some protocols in place where they will, since we only meet on a quarterly basis, it allows for a trustee, a chairperson, or a trustee designee to essentially accept or potentially acknowledge assignments of contracts, take action in between meetings, but obviously always subject to the full board ratifying that decision at a later meeting. So, we've had examples of where investment manager, for example, may get purchased or acquired, but the custodial bank, as we've had recently, they're going out of business, and so, we have to make some decisions. A consulting firm, an attorney, right? If something like these changes happen, rather than having the board wait until the next meeting, which could be 2 or 3 months away, the board could authorize the chairperson or someone else to make these decisions, and then obviously subject to full ratification by the board at its next meeting. But it really just serves as kind of a placeholder, just to avoid any issues we're having to avoid calling a special meeting. Can you guys hear me still?
He needs to send that to us
Yeah.
in an email because we can't.
Pedro, you're breaking up again. Any way you can send it to me in an email so I can send it to the board members of what you're talking about?
Yes, I can certainly send it in an email. It was really just, I'll try really quickly, it was really just if the board is comfortable to accept a motion to authorize the chairperson, for example, to make decisions in between meetings subject to a full ratification by the board. So in the case of an investment manager getting purchased or an actuary or attorney or someone leaving the firm or leaving or getting acquired by another firm, right? The contract can be assigned pending full ratification by the board at its next meeting, and then the board can decide, no, we don't want to do that, or yes, we do. No harm, no foul. So it's really just a means of trying to address the process to help the board, just continue in its administration.
Okay, yeah, we understand that, but go ahead and send it in an email anyways, that way we have it.
So we'll address
Okay,
it.
or I can address,
We'll address it at the next meeting.
or I can address it. Yeah, I can address it at the next meeting. That's not a problem.
Yes.
Yes, ma'am. No worries. I really, that's all I had. I don't have anything else to report on, from my standpoint.
Okay. All right, so then that's it. So then the next meeting would be May 5th at 3 o'clock.
next meeting, same time,
Same time?
same place, May
place?
5.
And to let the board, all the board know, Dan is leaving, this is his last meeting, so we'll have to get another member on board. So we'll get with the commission
Thank you
for
for your
that.
service.
I retired, and I'm going to retire.
Remember for our departing members, they have to file the Form 1S, the one final.
Okay, all right.
Get that for me?
No, you go back online
And-
where you did your Form 1?
Yes, exactly, that's all done through the same portal. Yes, ma'am.
I'll call you.
Okay, yeah.
Yes.
All right.
Okay, we need a motion to adjourn. All in favor? Aye.
I think that's a record for you guys.
Yeah, I think it is, yes.